respect for. This gentleman has his PhD in finance and economics. He wrote his dissertation on bank mergers and acquisitions. He avails himself to us twice a week, answers any financial question that you can think of, makes it very simple, a complicated subject, very simple and fun. He is a certified business success coach. He's a mentor to many. He's been a CFO. He has mentored and consulted with CEOs and CFOs to help them capitalize on or maximize their strategies to increase revenues at their companies. So please help me welcome to the line my friend, my partner, my mentor extraordinaire, Dr. Craig Bythewood. Dr. Bythewood, are you there?
Yes, I am, Miss Tanya Anderson. Thank you so much, Miss Anderson. Miss Anderson, you bring such a tremendous amount of energy to this movement, and we really appreciate the way in which you break it down for the basics for us. And here's a compliment for you. You say the same thing every week, and I listen every single week. That is a testament of the fact that it's more than your words. It's also the energy that we all pick up on, and it makes us want to walk away from these Zooms and not only be successful for ourselves, but also provide that level of success to others. So thank you, Ms. Anderson, for who you are and everything you do in this movement. So welcome everyone to a talk with the finance doctor, your RX for FOREX. So what I'd like to do is, for the beginners, let you know that there's one important aspect of this call that is distinct from our other educational calls. This call is a conversation. It is named a talk with the finance doctor rather than a talk from the finance doctor. So I can easily get up here and use my 30 years of experience to pontificate, but it's better when you and I communicate. So if you have a question, if you have a comment, if you have a testimony, please signify by making that red diagonal disappear and unmute your mic and ask your question. We even had a call some time ago called The Power of the Unmuted Microphone. So please understand that our best talk with the finance doctors have occurred when you ask a question or make a comment or provide a testimony that's directly from your life. Because when you do that, what happens is that we begin to delve into this concept called the collective consciousness, which means everyone together in a unit has matching energy. Otherwise, we wouldn't be here. So the Bible calls it where two or more shall gather. So please understand how important it is to unmute your mic and ask a question if you have it. So I would be remiss if I did not spend 30 to 45 seconds just letting you all know what a wonderful experience it was on Saturday to be at the wedding of Dr. Lonnie Reed, the only rocket scientist that I know, and Miss Elizabeth Brownlee, the only walking on earth vessel of love and light that I know. Okay, not the only one, but the strongest one. So it was a wonderful ceremony. Mr. Rogers joined me there, and it was really just a sight to behold. So those of you that watch live, I'm sure you felt the same thing. So tonight, on a talk with the finance doctor, I would like to address something that happened yesterday. During the live calls, 5 a.m. and 9 a.m., someone asked a question about a safe haven. That's a term that's used a lot in this movement. Ms. Dyer will say it a lot. That's a safe haven. Mr. Rogers will say it. That's a safe haven. Ms. Anderson will say it. That's a safe haven. So I really wanted to dig deep into A, what a safe haven is, and B, why a safe haven exists. So the best way for us to start this is to think about something about the dollar. If you notice, those of you that are actively trading, when you go to your MetaTrader 4 to trade, you have to add different currency pairs onto your MetaTrader 4. And when you do that, they're broken down into different categories. And one of those categories is majors. And if you click open majors, guess what's in there? Currency pairs that have the US dollar in it. Then from there, you've got like minors or exotics, but the majors are described as those that have US dollar. Now, a little behind the scene for you. I received my bachelor. I received my doctorate in finance and economics when I was 26. So from then to now, a lot of classes that I've taught. One of them was international finance. I probably taught it 15 times. When you teach international finance, chapter 3 is about exchange rate. And first of all, let me make this comment. The exchange rates that they talk about in chapter 3 are the same prices that you are looking at when you're on your vibrato. They're the same. Now, what they show you is that currencies that have US dollars in it, you take the currency divided by the US dollar, or you take the US dollar divided by the currency. But then the second section is called cross currency rates. And a cross currency rate occurs when you take one pair or one currency divided by a dollar. Then you multiply it by a dollar divided by the next currency. So what they're doing is they're taking each currency that is not a dollar and they are weighting it by the dollar. So what that means is that even an NZD odd, a Euro GBP, it has a dollar denomination in it because the dollar is looked at as being a very stable source of consistency in our markets. So that is why, if you think about it, those of you that are seasoned traders, you've seen news happen in the US markets and affect a pair that doesn't have a dollar in it. That's why. That's exactly why. So what I'm saying to you is, you want to first understand how important the dollar is in terms of the way in which we view things. So as a starting point, to explain this safe haven thing, let me say this. There are times when individuals will have a currency from another nation and they find the dollar to be more stable. I'll give you an example. I traveled to Panama, Central America, to teach a class about 20 years ago. I had cash, but of course I purchased the Panamanian, I believe it's a dollar as well, but Panamanian dollar, I had both. So what they would say to me is, how much is that? $10, but $5 if you pay with an American bill. Okay, what? Say it again. This product costs $10, but I'll charge you $5 if you give me American cash. So at that moment, that was my first real example of safe haven. Because in some countries, based on the political climate, based on the government, based on what's happening in the economy, some of those currencies are very unstable. So they want to have American dollars. So at that moment, the American dollar is a safe haven. I would rather have 5 American dollars than 10 Panamanian dollars. I'm sorry, y'all. Just hold on one second while I cough. I'm doing my best. Thank you for your flexibility fighting a very severe sinus infection here. But the show must go on, right? Right. So in that moment, that was an example of safe haven because the individual vendor would rather have $5 in American money than $10 their own currency, safe haven. Now, let's go back a little bit further. There is a 2-part cryptocurrency series I did a few months ago. Get it on our YouTube channel. It kind of explains to you, what the starting point is for crypto. But I bring that up because to start that, I talked about the fact that first we did barter. After barter, then we did gold. Then gold, paper money, backed up by the gold. Then paper money, backed up by nothing. Now digital assets. So what I'm saying to you is this. There was a time when all money was backed up in gold. So gold was sitting there as in a depository function, backing up the dollar that we just described has a high value from a stability perspective. So here's what would happen. When individuals would invest in a market and they found that market to be unstable, what do you mean by a market? Okay, let's suppose that a large portfolio manager invests in currencies. I just told you some of those currencies can be unstable. Let's suppose an individual investor invests in stocks. We saw today, stock market can be unstable. So what will happen is when they began to see that the market that they were participating in was unstable. Let me give you another one. In the 80s, a lot of large companies began to jump into technology. We call that the dot-com era. So a lot of these dot-coms would go around traditional types of financing because they did not want to lose control. So what they would do is they would borrow money instead of issuing stocks. And when they would do that, they would do it in very risky markets, meaning they would borrow money and pay very high interest rates. Well, when companies borrow money, it's not called a borrow, it's not called debt, it's called a bond. Why is it called a bond? Because there's a law that says corporations are bonded by law to pay investors back. Because corporations are big enough that if they chose not to pay, the individual investor wouldn't really have any due diligence to sue. Example, bonds have a denomination of $1,000. The average amount in the city of Tampa, Florida, where I live, to get a lawyer on retainer is $2,500. So the company won't pay me my $1,000. I'm going to hire a lawyer for $2,500 to get my $1,000 back. Exactly. So the government realizes that. So corporations are bonded by law to pay you back. Bonded by law to pay you back. Thank you for that. I see that. So what happens is this. In a market like that, where you have a very high interest rate being paid, let's think about this for a second. Relationships, concepts. If your credit sucks and you borrow money, what happens to your interest rate? Let me say that again. If your credit sucks and you borrow money, what happens to your interest rate? It goes up. So those dot-com companies that were participating in junk bonds, why they call them junk? Low quality, low credit score, you suck, high interest rates. So there were individuals who would invest in the secondary market of these junk bonds. And depending on what was happening with interest rates, say there was a big interest rate move, it would affect the junk bond market. So when that would happen, it would make it stable. I just gave you 3 examples of situations where individuals would invest in a market and it could be unstable. Now, don't walk away focusing on those 3 examples. Walk away thinking this. Anytime you invest in anything, it could be unstable. There could be fluctuations. There could be instability. There could be scenarios where you don't believe what's going on, or the individuals who undergird the infrastructure of the market don't believe in what's going on. So when that happens, people shift their portfolios away from those unstable, perceived unstable markets and put them into gold. Because gold is stable. Gold, in the context I just gave you, was not being traded. Gold was sitting there backing up money. So if I think that there's instability in these markets I'm going to put in the gold. Think about it. Isn't that the same thing the dude in Panama did? There's some instability with this Panamanian dollar. So I would rather have your dollar, which is backed up by gold, than to take my money. Same thing. Rather than participate in the junk bond market, rather than participate in the stock market that's unstable because of what happened today, rather than participate in whatever market we come up with. If I put my money in gold, I perceive that to be safer. So when we say it's a safe haven, there are two reasons why we're saying it. Number one, we're explaining why money is going into those areas. We're explaining why there's more liquidity. But we're also explaining why oftentimes, not all the times, oftentimes, there's an inverse relationship between the safe haven and whatever the other market is. And since before COVID, this pattern was much clearer, where gold and the US 30 were moving opposite directions, safe haven. So if I feel comfortable about these 30 stocks in the Wall Street, Dow Jones, US 30, then that's where I'm going to invest. But if I instead feel like I don't trust what's going on with these 30, let me take my money out, put it in gold, guess what happens? That money's leaving US 30. So US 30 goes down. Now we're putting more money in gold. So what happens? It goes up. So the concept of safe haven is basically dealing with the fact that anytime you have one particular asset, the individuals begin to lose confidence in, and they shift their assets and transfer them into another asset, that second asset is considered to be a safe haven. So based on what I've said thus far, gold, safe haven. US dollar, safe haven. It just depends on the situation. Now, let me be very clear about this. And me explain that progression, let me back up. Let me go on a tangent to my tangent. One of the things I love about this movement is this. We all have the ability to be able to learn the skill set. There's no prerequisite. The only thing you have to do is decide. You don't have to know any knowledge whatsoever. You learn the knowledge, you apply it in the BYOB movement. So I love using this example. We all know how to use this. Just today, I was on a FaceTime and I wanted to know how to pause my camera. So guess what I did? I went to the expert. 16-year-old, can you tell me how to do it? Oh yeah, you do this, you know how they are. You do this. So I didn't have to know anything to use this phone. But there are times when I go to the experts to get more information. That's what you're doing. So when we talk about these processes, I understand. There are individuals on this call right now who are killing the game in trading. There are individuals on this call right now who are going to kill the game. And there are individuals on this call who are going to stop. Dang, I was really liking this speech until he said that. So all you have to do is decide not to be in the third group. All you have to do is keep going. All you have to do is keep plugging in. So I said all that to say this. Many of you studied something other than business. So having conversations like this is very valuable because we have the opportunity to fill in some of the gaps that you didn't get educationally. Watch this. Some of you studied business, and I'm still filling in the gaps because I understand the way individuals teach in our society. They teach to theory. They teach to memorization. They teach to memorize and regurgitate. So conversations like this are important for everyone. So to complete the thought, I said, we went from barter, where everybody was agriculture, to coins, in our case, gold. And then we went, gold. And then we went to fiat money, paper money that was backed up by gold. Then we went into fiat money that was not backed up by gold. So to be clear, we, United States of America, stayed on the gold standard until 1975. That's important because oftentimes I kept doing this. What do I mean when I say killing the game? Killing the game is simply a way for me to use a vernacular to represent that you're doing well, that you are doing an outstanding job of learning the skill set and then applying the information. Excuse me, my thugness comes out every once in a while. So bottom line is gold was truly a safe haven when it was simply used in a depository form to back up fiat money. It's not used that way anymore. So let's go a little bit deeper. EFT, EFT. I already know most of you have heard about it, but you might not be sure what an EFT is. EFT stands for Exchange Traded Fund, ETF. What did I say? ETF. Exchange Traded Fund, ETF. Exchange Traded Fund. Now, here's how it works. We take an asset and then we create securities based on that asset. And then we trade based on that. So what that means is right now, when you're investing in gold, you're not investing in the physical gold bars or gold bullion that was sitting in the account or sitting in Fort Knox or sitting in the safe. You're investing in paper securities, the exchange traded funds on gold. So technically, even though it's still used as a safe haven, it really isn't, because it's not what it used to be. But there's a reason why I'm bringing this up. And I'm going to stop at 10:25 on purpose because I want you all to ask questions. The reason why I'm bringing this up is this. There now is a new type of asset that is called a digital asset. One of the things I've had the benefit of doing throughout my professional life is I teach different certifications. And one of the certifications that I teach is individuals that are getting brokerage licenses. So I'm delivering the material to individuals who are studying. And when you look at the materials that brokers are getting, they're being taught that cryptocurrency is not a security. It is a commodity. Now, why are they doing that? Very simple. Because it's so new, it's so innovative that people have yet to really be able to define it. So oftentimes, you remember that happened in music. We got R&B, we've got rock, and then you had these songs that don't really fit in either one. It's not hip hop. What do we call it? So we called it neo soul. So all I'm saying is cryptocurrency is at a point right now where it's really uncategorizable. So watch this. Right now, if you look at the rates of return on Bitcoin versus the rates of return on gold, the rate of return on Bitcoin is higher. So many people, recognizing what I just said, that it's not really gold, it's paper certificates on gold, are now starting to use something else as a safe haven, and that's Bitcoin. Think about how many of you had to fund your brokerage accounts with Bitcoin. And so what makes something stable oftentimes is the use. I started off by telling you all of the currencies that exist in this world use a dollar. They use a dollar. And now we're in a situation where many applications are using Bitcoin. The city of El Salvador, the country of El Salvador, they use Bitcoin as their national currency. Mr. Rogers shared with us today on our radio show that the Dallas Mavericks has made it where you can pay for tickets with Bitcoin. So literally, what I'm sharing with you is a nice tie-in to where we are, the historical part of it, and where we're going. Because what is about to happen is that Bitcoin is beginning to replace gold as a safe haven. Doesn't change the definition, but it does allow us to watch in real time as we begin to have different versions of safe haven. Now watch this. The cryptocurrency market, the DeFi environment, decentralized finance, has its own version of safe haven, and that is this. We know cryptocurrencies fluctuate. We know that many of them start off low and ascend. We also know that many governments are putting pressure on cryptocurrency because they want to regulate it, okay? So let me be clear on this. I said this in those two videos I talked about. If a coin is not Bitcoin, it's referred to as altcoin. Alt stands for alternate. So there are altcoins right now that are what are called stable coins. which means, I'm sorry, they're tied. Hold on one more time. We're just gonna edit that out on the recording. Nobody will ever even know. So with these stable coins, it works like this. These stable coins are mirrored with the US dollar. So they're 1-for-1 with the dollar, so they don't fluctuate. So what happens is a lot of people who are active in the cryptocurrency market, there's more people than you think, they'll take whatever money they have in crypto, if they want to use it or apply it or pay for something else, they'll transfer it to stablecoin. Because while it's a stablecoin, it won't fluctuate. So in the genius of what the DeFi movement has done is it has created its own stable coin or its own safe haven within the infrastructure. You know how Ms. Dyer likes to say market structure in market structure? So they have created a safe haven within a safe haven. Questions, comments, testimonies? Questions, comments, testimonies? Okay, so if one comes, just pop in. So to complete this thought, my story started with an experience with a foreign vendor wanting my dollar more than they wanted their own currency, safe haven. Then we discussed how certain markets, when the individual investors begin to feel that these markets are unstable, they want to put their money somewhere that they consider to be stable. That was gold. I'm now also adding to the fact that because of exchange traded funds, we're now looking at paper gold and not real gold. And as a result of that, it's a safe haven, but it's not really a safe haven. And understand, safe haven is an eye of the beholder. So if I view it as a safe haven, the money's still going out of that first asset and going into the second. And then we recognize that as we watch the transition, as we literally watch the energy transmuting from gold to cryptocurrencies, we see in real time a new safe haven emerging. And we also recognize it in the cryptocurrency space itself, that stable coins provide that same energy of being able to provide a safe haven within a safe haven. This has been a talk with the finance doctor. One more time, questions, comments, or testimonies? Questions, comments, testimonies? If you have a question, a comment, or a testimony, please unmute your mic. Okay, I want to thank everyone for your attention tonight. If you have a question, please unmute your mic. And you know what?
Is safe harbor and safe haven similar in meaning?
Yes. Bottom line is, this is where I'm going to put my funds so I feel comfortable with it. Thank you, Miss Patty. I appreciate that. Oh, and let me get this recipe that y'all gave me. I obviously need all the help I can get. Okay. One more time. Questions, comments, or testimonies? Well, thank everyone for your patience with me. And Julius, I see your question, but I want to really give that some time. That's not a 10:30 question. So bring that question to me on Thursday, and I'll really pull that one apart. For those of you listening to the recording, his question is, why have cryptos been so volatile and unpredictable? And I'll go ahead and give you a spoiler alert. First thing I'm going to do is tell you why they haven't been volatile and unpredictable, and then explain why you feel that way and how we can view cryptos. Okay, so this has been a talk with the finance doctor. Again, thank you for your patience. And I'm going to close the Zoom and then go straight to the emergency room. I'm just kidding. All right. Thank you for the well wishes, and thank you for, who gave me that recipe? Well, whoever you are, thank you. Regina, thank you. Oh, it's a direct message. I'm sorry, I called you out for nothing. Thank you, Miss Regina. Okay, so this has been a talk with the finance doctor. I love you all. Love this movement. Love everything we're doing. Continue to be who you are and know that you can do everything in your power to do well, to kill the game. And we're going to end in prayer. Heavenly Father, thank you so much for this opportunity to greet this audience, my favorite audience. Please allow these conversations to have value in every way. Please allow us to take the words that have been said, to take the teachings, to take the trainings, to take the mentoring, and use it to make our lives better for ourselves and future generations. Heavenly Father, we are thankful, we are appreciative, and we are grateful. Amen. Okay, everybody, this will officially end this call.